All right, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to go over some Bitcoin stuff, lots of Bitcoin news, and we'll go through some nice looking charts. I want to show you those. Then we're going to talk a little bit about the next bearish narrative. We've got a new bearish narrative, so we're going to go through that as well. And then we're going to talk a little bit about liquidity because, of course, this continues to be a story comprised entirely of liquidity. So if that sounds like something you're interested in, sit back, relax, hit that like button, and let's get into this. Look, let's open with a joke, okay? 100% of BSV, Bitcoin Satoshi Vision, holders are at a loss, regardless of what currency it's priced in. The point of this is not to say, ha ha, these people were wrong on their investments, or ha ha, they've lost money. The point of this is simply to illustrate if somebody has a different vision for the Bitcoin network, they are free to fork the chain. They are free to create their own sub-chain off of the Bitcoin protocol, and they can change one or more of the rules as they please. The beautiful thing about blockchain is that we then let a free and open market decide which is best. Everybody has had the opportunity to say that they prefer BSV. Everybody had the opportunity to say, actually, I like these rules better. I'm going to use BSV instead of Bitcoin. But the market has spoken, the people have spoken. Nobody wants the forks of Bitcoin. Instead, they just want Bitcoin. And this tells us two things. One is that these rule changes were not approved by the masses. And two, people in this space, the users of the Bitcoin protocol, like it just the way it is. In other news, Santa Monica firefighters have just become the first union to purchase and hold Bitcoin. So the union has decided it wants exposure to a hard, inflation-resistant form of currency, and it has chosen to achieve that by holding and storing its own Bitcoin. Yesterday, the football team of Switzerland's Bitcoin city, Lugano, will attempt to defend their crown in the Swiss Cup with the Bitcoin logo on their backs for the entire world to see. As you can see, Lugano's plan B. We love to see it. I showed this in an episode a couple of days ago, showing that the total transaction fees were coming down but still remain elevated. And since then, we can see this continues to entice miners to sell their Bitcoin. The miners continue to dump their Bitcoin to pay for overheads, and this is, of course, likely behind the compression and the price suppression and the sideways action that we're getting at the moment. But eventually, these miners will decide that they have sold enough Bitcoin, they can pay for their overheads, such as electricity, such as cooling, such as replacement parts, because those miners do blow up quite often. So once all of those overheads are paid for, they will be ready to go back to net stacking, and this sell pressure will have been alleviated. As you can see, this is very, very significant quantities of sell side pressure from the miners. So as soon as this is over, it's reasonable to expect significant upside for the price of Bitcoin. I know a lot of people out there are concerned about the volume. I've even had a couple of people reach out to me and ask me if I include volume. And the answer is quite simple. I look at volume in a very specific set of conditions. When I think we're getting near macro bottoms for Bitcoin, I look to the Coinbase volume because we want to see big spikes in Coinbase volume to help us identify the ultimate capitulative lows of the cycle. I also, once we get towards where I believe the price is coming into a macro top for the 4-year cycle, I will then go back to the Coinbase chart, look at the weekly volume, and be looking for huge spikes in volume as we enter what I believe is the parabolic portion of the rally. So for me, the answer is simple. I only really pay attention to volume at major lows or at major tops. Now, as you can see, people at the moment are misreading volume entirely. Bitcoin volume has collapsed. The price will soon follow. Few understand this. Well, actually, this is entirely wrong. And you can see here that volume is one of the most misunderstood concepts in all of trading. Most volume typically comes at the top and the bottom of the chart, which is why, like I said, I use the Coinbase weekly trading volume because I believe the Coinbase is where the majority of the retail participants come in. That's where I believe the majority of the speculators, the laggards that show up and buy the top just because their mate told them to buy Bitcoin, right? They don't even know what they're buying. They're just hopping in right at the top. So that's why I use Coinbase. And like I said, the most volume typically occurs at the top and the bottom of the chart or at the start and the end of a trend. A lack of volume is not necessarily a bad thing because a trend that is already moving does not need additional volume to continue in that direction. In addition, almost every single consolidation pattern starts out with a high volume and then the volume slowly trails off until the pattern completes. if you were going to use volume, the way to do it would be to watch the volume on the red versus the volume on the green candles. If the price is in an uptrend, but the red candles have significantly more volume than the green candles, that is a warning sign. So you could always watch for counter trend volume. Something else I'd like to add in here, and one of the reasons I don't really pay much attention to volume, which might be surprising. A lot of people, especially breakout traders, volume is like their bread and butter. They have to have high volume on breakouts and blah, blah, blah. But I came from a stock trading background before I got into crypto. And a trick that the market makers can play using the stocks is when they're running the orders through the order books, they can execute a trade above or below the midpoint of the spread, which is the difference between what you buy and what you sell at, right? So they can put a buy through below the midpoint of the spread and indicate it on the book as a sell. So what this basically tells you is that the volume data could be fake. The volume data could be misleading because it's up to the market makers where they put the order through the book. So for that reason alone, I've never really trusted volume. I clearly don't need it. You've probably never heard me speak about volume on any of my charts. And if you've been here for a while, you know the breakouts work just fine. So like I said, anyway, I hope that answers the volume questions. If anyone's concerned about the decline in volume at the moment for Bitcoin, I personally am not, and I wouldn't be. Bitcoin has seen a lot of sideways price action recently, but during that time, two very important things have happened on the new pool, which is the net unrealized profit and loss. First of all, we've had a retest of the trend and support was made on the hope and fear sector. The next step is a leap up to belief and denial. So you can see here, we've got the green band at the bottom. We are currently sat right on the threshold of optimism and anxiety. And the next leg up will take us to the upper band of the belief and the denial phase. So this next leg up is coming. Whether we've got a bit more consolidation to make first is to be determined, but as it stands, I remain optimistic that we are going to see a push up over the coming weeks and months. Koosh here, I love how Koosh is so bullish all the time. I think he's probably one of the biggest bulls in all of the space, and Koosh is suggesting that we could easily see new all-time highs as early as July. So that is to be determined. I'll take it if we can get it. As ever, for me personally, I like to take things one day at a time. Willy Woo points out here, the cost basis analysis is showing upside, looking better than downside. Summer months are typically flat or bearish, but every June inside the reaccumulation phase has been bullish. We're in one such window right now. There's a window for Bitcoin to rip in June. My educated guess would be that we are just 1 week away for the opportunity to open up. So let's see how this plays out. You can pause your screen and take a good look at this if you want to. I have to admit, I fall on the side of Bob Lucas here. This is how I see it personally. Bitcoin consolidating via time sets us up really nicely for a summer rally. So I'm going to hop into a chart and show you this in a sec. We would like to see a shakeout first in June, not me personally, but Bob would. But if it continues to chop sideways, that's actually even more bullish. So let me hop into a chart for you just to illustrate this point. So here's Bitcoin, right? If we grab the low from back here and we measure out, we are currently on day 24 and our 60-day cycle low is due right around the 11th of July. Now, if we're going to break out of this, we need to do it this week because otherwise, if we don't start to get a big push up here, the next 60-day cycle low is going to form at the best a consolidation cycle low, something like this, a sideways move, or potentially even if Bob Lucas is right and we get the shakeout, we might even come down and do something like this before we can go again. So either way, it seems like by now, at least from my perspective and from Bob Lucas, that enough time has elapsed here that we're likely not going to see what I was hoping for, which was this, right? A big right translated cycle before the next cycle low and go. So again, if we were to break out, we could easily do Bitcoin things this week. But if we don't do it this week, then I think what we have to do is grab this cycle low indicator from down here, move it to here in the best case scenario, and potentially slightly lower down in the worst case scenario. Of course, if we do not make a new low, if we do not undercut the cycle low from back here, that is more bullish than if we do. But we certainly have to be open to all outcomes, including a shakeout. So unless we can get a breakout this week, then I think we have to scratch this idea off and move to, at best, hoping for a sideways consolidation cycle, of course being open to one more dip down into the next cycle low. Whenever we get there though, I do think that sets us up for a mega rally. So we should get a very nice end to the summer for Bitcoin. Emas here is asking all the right questions. Where are all the macro larks? Remember, for a long time, it was the 2008 fractal. It was everything's going to break, everything's going to blow up. It was the yield curve, liquidity, M2 supply. It was the Fed meetings. It was this place. And then, you know, grain, lumber, hedging your bonds, copper to cotton ratio. Where are all these people now? The markets just continue to move higher. Those people clearly did not know how to look at a chart, because that's all you needed to do was look at a chart and the chart would tell you that it was going up, right? But as always, perma-bears are going to be perma-bears. Doomsdayers are going to be doomsdayers. And people that are outside of the market, people that have shorted the market all the way up, people that have sat on the sidelines waiting for one final plunge that never showed up, they are still begging for a new bearish narrative to hang on to. And currently, we've abandoned the 2008 fractal, all those other ones I just listed, and we've moved to this. The Treasury is set to unleash a tsunami of bond sales to fill up its empty coffers beginning tomorrow. So 170 billion in bonds will be offered for sale today. This is today, totaling $1 trillion by the end of this quarter. This will remove 1 trillion in liquidity and reserves from banks. So this is the new bearish narrative. This is the new 2008 fractal, isn't it? Here it is again. The Treasury is about to dump 170 billion worth of Treasury bonds on the market as of today. So does that mean we have to crash? Does that mean it's game over? Does that mean the 2008 fractal is finally going to play out? Well, of course not. Apple is just about to follow Nvidia to new all-time highs, as you can see here. This took less than 6 months from the bottom. Apple went from 2 trillion market cap at the lows to 2.8 trillion today. And Bitcoin, it only sits at $500 billion as of right now. So this question of where will the liquidity come from? Liquidity is about to dry up. I mean, we can see it. It's literally flowing in right in front of our eyes. The liquidity is going to come from the exact same place that it came for this move, that it came for the Nvidia move just recently. And because they'll always find another place to get it. In the UK, they're talking about a universal basic income of £1,600 a month being trialed. If you're a UK citizen like I am, before you get too excited, they've already chosen, it's just a small group of 30 people, so you're not going to get any free money just yet. But this is likely coming, okay? The printer always comes, liquidity always shows up. And you have to stop and ask yourself if you're one of these people that's so sure of yourself, that's so sure, right? You were wrong the whole way up, and now you're so sure the market's going to dump. You have to ask yourself the question, why do equities continue to scream higher on every single negative data point? Is it possible that it's because the recession that everyone's been calling for was already largely priced in all the way back in October at the lows? In other words, we are climbing the wall of worry. So I want to run through a few charts for you now. Look, in May, ISM fell to 46.9 and came in below consensus of 47, which was very much in line with our thinking the ISM would remain weak over the next 1 to 2 months and bottom in the summer. Of course, that's right where we are now. We are expecting this to turn up. Now stick with me because you're going to like this. The Philly Fed index indicates a similar outcome, albeit closer to 40 over the next couple of months. But what this speaks to is an imminent reversal, an imminent bottom, just like we saw here, here, and here, telling us to keep an open mind about better than expected outcomes walking forward. It's the same deal when you look at the financial conditions index. Although crucially, it's already bottomed for the cycle and continues to rip higher, as you can see here in blue. Again, does not speak to an imminent stock market crash, but rather a reversal. And it's the same deal when we look at the S&P 500 cyclicals versus defensives. As you can see in blue right here, large money institutions have been rotating out of defensives and into cyclicals, not something you see right before a 2008 style meltdown. Unemployment data also surprised to the upside, but the thing to understand here is the current degree to which continuing claims have risen off of the lows is not only 100% recession territory going back to 1967, but also suggests that unemployment could rise around 1% off the lows, so up to around 4.5%. The key take home here is with rising unemployment, it's just 0.5% rise off the lows going back to 54, and that has always been the level where historically the Fed has stepped on the brakes and shift from drive to reverse pertaining to the rate hikes. So we know we're getting in that neighborhood where we could see a pause. In fact, they've even started to talk about a skip. And the last thing I want to point out here is whilst everyone is still talking about recession, okay, the Financial Conditions Index continues to suggest that global liquidity will be up around 20% year on year by Q4. Take a good look at this. This is in blue, okay? The financial conditions. In white, we see the Global Liquidity Index. Notice where liquidity bottomed out. Notice where the decline in liquidity bottomed out in October of last year. What happened to the stock market in October of last year? Of course, we made a bottom. Here's the S&P 500. As you can see right here in October, we made the lows and have been making higher highs and higher lows ever since. So with global liquidity bottoming out right where the stock market did and in an uptrend ever since, is it really surprising that we're seeing the stocks rip higher? And again, take a look at the financial conditions index in blue. It doesn't take a genius to work out these two follow each other. These two are highly correlated. Again, it tells us to keep an open mind about better than expected outcomes walking forward. Just to really drill home this point, stock market gains are simply a mirage caused by endless waves of monetary debasement. Where liquidity goes, where global liquidity goes, the stock market and Bitcoin has always historically followed. This time really is different though, because the usage of the US dollar as a reserve currency is declining. So in addition to all of this liquidity stuff that we have going on, at the same time, we have the death of the dollar unfolding right before our very eyes. If it's no longer safe to hold dollars, and with people moving away from holding dollars, that money has to go somewhere, right? It goes towards holding assets. I'm your boy Camel. I hope you're doing well in life. I hope you're ready for this week and looking forward to it as much as I am. If you want to see all the deep dive TA, all of my live positions, and how I'm handling these markets in real time as a pro swing trader, then head over to yesterday's video. All of that still holds. Obviously, the markets aren't even open yet. I'll be back tomorrow with another video as always. And in the meantime, take care from me. All the best. Cheers. Bye.